What's in store for NVIDIA?
Marketplace Morning Report is supported by Odoo, dedicated to providing software designed to scale with businesses. Odoo's programs for manufacturing, accounting, and more aim to provide building blocks for creating a custom software suite. Odoo, what businesses need. And by Yubico, makers of the YubiKey. YubiKey helps protect important digital applications and services. YubiKey, still undefeated, the original passkey. More at yubico.com.
From Marketplace, I'm Sabri Benishore, in for David Brancaccio. NVIDIA, maker of AI and gaming chips, is not quite meeting Wall Street's lofty expectations. The company announced second quarter results yesterday, which were pretty good, but they fell short in one key area. Marketplace's Nancy Marshall-Genzer has that.
NVIDIA computer chips help power AI and the data centers being built by the likes of Google and Meta. Its newest chip, the Blackwell, is selling briskly, but NVIDIA's data center revenue came in below analysts' expectations, sparking fears of a slowdown in AI spending. Still, the company reported overall revenue for the second quarter of more than $46 billion, up 6% from the last quarter. It's expecting to rake in even more money this quarter. NVIDIA designed a special chip for China, but it didn't sell any of them to China in the second quarter and doesn't include any China's sales of the chip in estimates for this quarter. I'm Nancy Marshall-Genzer for Marketplace.
President Trump has been relentlessly trying to gain control over the Federal Reserve, attacking its independence, most recently with the ongoing attempt to fire Fed Governor Lisa Cook. But what specifically does the president want from the central bank? Well, he wants lower interest rates. The current federal funds rate, these are the short-term rates between banks that spill over into the rest of the economy. The current rate is around 4.5%. The president would like it down to 1%. So what if that happened? Marketplace's Justin Ho has that.
Let's say the Federal Reserve cuts the federal funds rate to 1% tomorrow. George Perks, macro strategist at Bespoke Investment Group, says the first place you'd see a reaction would be in government bond yields.
So interest rates would drop across the entire benchmark treasury curve.
Meaning both short-term and long-term rates. Perks says those influence all kinds of credit throughout the economy.
One example would be auto loans. So for a given dollar amount that you can spend on a car payment every month, you would be able to buy a lot more car because you have a lower interest rate that you have to pay on your borrowing.
Business loans would also get cheaper. Perks says companies would likely borrow more to expand and to hire people.
Taken together, you just see a range of factors that would point to a hotter economy, certainly, but also significantly higher inflation than the already above target inflation we have right now.
That's because more demand for workers would push up wages. More demand from consumers and businesses would push up prices. And if inflation picks up again, there would be some unintended consequences.
We would see, ironically, yields on long-term debt increase.
That's Daryl Fairweather, chief economist at Redfin. She says investors would demand higher yields on longer-term debt because inflation would otherwise eat away at their returns. And remember, yields on longer-term bonds affect the cost of mortgages.
Mortgage rates, they would go up, and it would actually make it more expensive for people getting long-term debt, and that would probably hurt the housing market.
Even though President Trump has argued that the Federal Reserve is the one hurting the housing market by keeping rates too high. So I asked Fairweather whether a lower federal funds rate would make mortgages more affordable.
No, that is not going to accomplish that goal.
One thing a drastic rate cut would do is undermine the credibility of the Federal Reserve.
Then that could lead to an exodus of capital.
Ann Villamil is an economics professor at the University of Iowa. She says that exodus could push interest rates on government bonds higher, too.
To compensate for the risk of the Fed losing its credibility. And that's what markets do. They price out risks.
That's why even if the president thinks lower rates would be good for the economy, markets would think otherwise. I'm Justin Ho for Marketplace.
All right, let's do the numbers. The FTSE in London is down about 0.5%. Dow futures are up 0.1%. S&P futures are up less than 0.1%, pretty much flat. NASDAQ futures down less than 0.1%, also pretty much flat. The yield on the 10-year Treasury is 4.23%.
Marketplace Morning Report is supported by Viking, committed to exploring the world in comfort, offering a small ship experience with a shore excursion included in every port and onboard cultural enrichment. Discover more at Viking.com. And by This Old House Radio Hour podcast, answering listeners' DIY and renovation questions and diving into home design trends, available in podcast apps.
Technology has made it so much easier to apply for a lot more jobs. Before, it was digital job boards. Now AI helps people tweak their resumes and cover letters in seconds and then blast them out, practically automating job application. But AI has also helped employers automate sorting through all those applications. Our friends over at Marketplace Tech have been reporting on the trade-offs involved when AI meets the job search. Marketplace's Megan McCarty-Carino spoke with Oliver Golden Egan about his ongoing job search.
I have not gotten traction on any applications that I have not had some sort of personal connection to.
He graduated from Pomona College on scholarship last year. After interning at Harper's Magazine, he's been looking for full-time work in publishing. He usually tries to cold contact an employee of his target company so he can send his resume via email. He's even thought about delivering application materials on paper, in person.
I don't come from a background that's necessarily replete with those kinds of connections. My mother's a housekeeper.
AI application systems are often sold as fixes to the traditional biases in hiring. But Princeton computer science professor Arvind Narayanan says they introduce new unfairness.
The experience that we put these job seekers through, right? Being interviewed by a robot, essentially. I think it's kind of a violation of basic dignity.
He says there's little evidence AI can accurately predict who will excel at a job in most cases.
To hear the full report, you can head over to marketplace.org. And by the way, if you want to be clued in to the day's economic news, you can sign up for our daily newsletter. We will bring you the best of Marketplace in your inbox. Sign up at marketplace.org/subscribe. In New York, I'm Sabri Benishore with the Marketplace Morning Report. From APM, American Public Media.